Hello and welcome to the today's session. And today's lesson, we are going to learn about candlestick anatomy. Now, this is the very important topic if you are trading. I, I mean, if you're trading every pair, every asset that you're trading involves candlestick, and most of us we use candlestick in trading, in analyzing. So I'm going to teach you a lot of information that probably you didn't know, or probably you know, but you didn't know how to use them. So this is the very important topic. And mind you, this is going to mark as the foundation to the coming lesson that I'll be posting in this channel. I'm going to talk about a lot of things. I'm going to talk about tricks to trade certain pairs like gold, that Bitcoin. I'll be talking about certain entry technique, but those techniques use candlesticks. Now, this will mark as the foundation to those videos. And make sure that you watch this video full, and make sure you subscribe to this channel, and make sure you share to other people. So let's go to the lesson. Now, candlestick anatomy. When we talk about the candlestick anatomy, we are talking about the morphological composition of the candlestick. Now, we are talking about how these candlesticks are created. What's the theory about behind them? Now, when we are talking about what makes the candlestick, uh, the candlestick is composed with different things. Now, we all know that we have two types of candle. We have a bullish candle and we have a bearish candle. Now, this is how those candles are structured. Now, based on the a bearish candle, this is the bearish candle. Now, the bearish candle, we all know we have it composed with the opening, where we see the body starts, and we have the closing where the body stops. And now the candle involves wicks. Now, those wicks, we call them, when in a bearish candle, this is the high of the candle. This is where the price went before, after opening. This is the price, the point where the price went farthest before going lower. So this is the wick, this is the high of the candle, and this is the closing of the candle, the closing price, and this is the lowest point where the price went before closing. So sometimes we call it the furthermost deviation, or FMD, or we call it thrust, or sometimes we call it a low. Okay. Now, uh, the opening and the closing price, this is the point where all the traders, all the participants in the market agreed on that price, agreed in that price. So you can see the candle just went up, but the price went up like this, but the participants in the market at that particular period of time, they didn't agree to that point or to that price, so they pushed the price down to create the closing price or the opening price. Okay, so that is how the bearish candle is formed. And you can see in the bullish candle the same thing, but it's upside down. We have the opening of the candle, the opening price, where the participants agreed on that price on that certain point, and then the price went lower. The price went lower to create a low of the week, and the price went up. Now, this is the most deviation, the furthermost deviation or thrust or high. Okay, this is the price went higher before closing. Now, this is the closing price. Now, this is the point where all the participants agreed in this price, agreed in this uh, in this in this point. Okay. Now you have to understand this very, very well. Now, probably you have seen this term and you didn't know what is the meaning behind them. This term, OHLC, you see it every day in your chart at this point here. This is the point where you see these terms and you don't know how they are meaning. I mean, what's the meaning of this OHLC? Well, it's simple. The meaning behind is the O stands to the opening price. Okay. The H stands for the high of the price. The L stands for the low of the price, and the C stands for the closing price. So if you see this data here, the O stands, this data here, the O is the opening of the price. So if you see the candles printing, for example, if you go to the daily candle or H, 1H candle or 4H candle or anytime, the most recent candle is the data shown here. Okay. Now, this is what it tells you, that the O is the price that opened. The H is where the price went higher enough. The low is the lowest point of that candle, and the C is the closing price. Now you can see here the closing price is still changing. That is why that is probably this candle here, the most recent candle here. This is gold, the weekly time frame. This candle is still moving, so the week is not closing. Today is Friday. Okay. Now, this is how this data is intel. Okay. So it is very important to use this candle, to use this data, and I will show you the importance of using this data in the coming video, where I'll be talking about the 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 use of daily candle, how to use the daily candle to catch some trades. Now, this data is a very, very important data to have in your analysis. Okay. Yeah. Now, after understanding the theory behind the candles that are printing, let's talk about a little thing called candlestick breakout. Okay. Now, candlestick breakout is simply how the candlesticks break and how the intel, what's the meaning behind the candlestick breakout. Okay. Now, this is a very, very important thing to understand, because this is, and especially when you're trading, when you're analyzing the higher time frame, it's very, very important, because when you have a candle, we have two types of break, okay? We have a week to week, okay? And we have a body to body breakout, okay? Now, if a candle breaks with only wicks, okay? We can see like a wick like this, okay? This can intel, or this can bring you an information, two types of information. First, if it is on a swing point level, this can intel that the market is about to reverse or it's about to perform a retracement, okay? But if you find a candle is breaked by body, this can mean that the price is about to continue, or if it is in the retracement first, that means we are about to continue with the retracement. So you have to keep that in mind, okay? And sometimes we can have a wick to body, okay? Wick to body breakout, where price breaks the wick, okay? Breaks the wick of the last candle. Now that can bring you an information that the price is about to continue with the direction, or the price is about to continue with the retracement phase. Bear with me here. So this is very important to understand. Now I will show you some examples where the price performs these breakouts, these two types of breakouts, or rather these three types of breakouts, okay? And before we go into the examples, I want you to understand these things. Now, when we are talking about wicks and body, these are both the most important things to understand. When we are talking about wicks, here is where we mark our swing points, okay? Our swing points. And when we are talking about the body, every opening and closing of the price is a level. Understand this, okay? Every opening price and closing price of the candle is a level. Now, there is where we mark our level, okay? And in the wicks, that is the point we mark our swing points, okay? That is the point we mark our swing point, okay? That is the very important thing to understand before we go much further, okay? Before we go much further. Now let's go to see, let's see some of examples to tell you how this candlesticks works. Okay, so let's see how this candle behave, okay? Now, I told you the candle breaks can bring you a lot of information, okay? Can tell you a lot of things. Now, for example, let's look at this high and this low here. You can see when the candle breaks below, this candle here failed to break above this bullish candle. You can see the next day, this is the daily time frame, by the way. The next day, we saw price closing below that candle. And after this candle breaks with the body, we see the next candle came and closed below that candle. Now you can see here, this candle failed to close by body, but because this candle closed by the body at this point, that brings you the information that in the next days we are going to have bearish momentum. Now you can see here the candle closed below, and you can see, for example, in this point here, the price failed to close by the body in this point, and the next day what did this happen? What happened in the next day? The candle print bullish to close to that candle where the price failed to close. Okay? Now, after the price closed to that candle, we saw the price continuing with the bullish momentum. You can see here again, price failed to close here. What happened the next day? Price continue with the bullish momentum. The price reversed, okay, closing to that point. Okay, you can see again here, price failed to close by body, and the next day's price push upward. You can see again in this point here, price failed to close here. The next days, what happened? Price moves bearish. Now the closing and the body, the candlestick breakout can gives you a lot of information, and this is very important because it can tells you what can happen to the next day, what can happen to the next hour if you are in the 1 hour time frame, what can happen in the 4 hour, the next 4 hour. For example, let me show you an example of the 4 hour time frame, for example. And this is the most important time frame that I use every day. For example, let me tell you, for example, today, okay? See here, let's start in this move here, okay? Let's start in this move. This is the last 4 hour. The next 4 hour that came breaks below this candle, okay? So what happened there? The next 4 hour continue breaking below. Let's come here. This 4 hour and this 4 hour here, this 4 hour failed to close the last 4 hour. What happened? The next 4 hour reversed. Now you can find a lot of entries in here. You can find a lot of entries just using this trick. For example, if you mark out that high that was failed to be closed by body, if you go to the lower time frame, maybe the 15 minutes, maybe the 1 minute, you can find the entries like this. Okay, you can find the entries like this. For example, this is for those who use double top. You can find the entries there. For those who use levels, for example, I use levels a lot. This is my entry here. And if you go to the lower time frame, the 1 minute, you can find the entry there after the market break below here. You can see market break below and came to the last liquidated candle here, and that is my entry. You can find that entry, very, very important. And of course, there are a lot of entries here, entry types. For example, for those who use power of three, this is accumulation phase, okay? This is accumulation phase. Then the price performed uh, manipulation, and then the distribution phase. Now this is the distribution phase, the continuation of the distribution. For those who are using fair value gap, there there is your entry. Okay, there is your entry. For those who are using uh order blocks, there is your entry. So a lot of entry. You can use all any strategy of your own, but just by understanding the candle formation, the candlestick's behavior. So this is the very, very important topic to understand. So what I want to you guys is just go and practice how candlesticks break, behave. Okay, when you see the week to week breakout, what happened to the next candle? When you see body to body breakout or body week to body breakouts, what happened to the next candle? That is what I want you to go on and practice, go on and back test. Okay, now for the coming lessons, I will be teaching you some different tricks and hacks on how to trade, on how to have entries, on how to have uh, to get money just using these candlestick tricks. Okay, so I have so many tricks that I'm going to teach you. So what I want you is to start subscribe, turn on the notification, and thank you guys for this lesson. See you on the next one. Okay, see you on the next one. Thank you, everyone.